1980, we moved out 45 years back, and my
So
company
you've
moved us
convinced me.
actually to
You've
150.
convinced me I'm on the path of Vinney Chopra. You just convinced me. Because you came to, where did your uncle live when you first came to this country?
Well, Washington D.C., Washington D.C., Rockville,
Washington, D.C.
Maryland, with $7 in my pocket and nothing but just clothes.
So you slowly went from the East Coast into
Yes.
Ohio, and then you made it all the way to the West Coast. All along that journey, you started buying single family homes. And then you got up to 18 of those, and you said, it's time to go to multifamily. And in
Yes.
a
Yes.
single transaction, you almost doubled your portfolio. But then
You
a
know what?
week later,
Yes.
you
Yes.
closed an over 100 unit property. Is that correct?
109 units, brother.
109
109
units.
units with 101 storage units on the same location. And that was in Odessa, Texas, too. And that property came around after 20 years, or whatever, 18 years, whatever it is. And somebody's selling it now, the same property. I told my VP of finance, I said, you're not going to believe this Palm Garden, whatever we bought, for 2.4 million. I bought it back then, sold for 5.6 million, gave my investors 40.43% IRR, back then. And that was my very first 109 units, totally, to be truthful. And, the key thing is this real estate doesn't die down. If you look back at it, that same property is worth maybe 10 million now. I don't know how much it
Right.
is. So it's gone 5 times in value. Real estate appreciates, even though the CPA and the tax laws in USA say that your property will be worth zero in 27.5 years, right? Residential property will be worth zero, but it goes higher and higher and higher and higher. That's mind boggling. You know, it's just amazing. The tax laws are so good for the real estate people in USA.
So we've got a time right now where you're absolutely
Yes,
right. In fact, Warren Buffett just shifted, I think, 284 million dollar, 284 billion dollars, billion with a B.
$1 billion.
So
Uh-huh.
284 billion dollars into government bonds. He now at this point owns over $100 billion more in government bonds than the actual United States Treasury.
Oh my gosh.
Which is a
Wow.
very interesting time because that means he's going, that's a conservative play. That's a cash flow play.
Very.
It's a debt play. He's just saying, hey,
Yes.
I'm taking government bonds. I'm just taking debt versus the equities of his companies. So people ask me on the Facebook today, they're like, what is he doing? It's a reallocation. He's just looking at some of his
Yeah.
risk. He's taking some of that off the
Yeah.
table and he's putting it into income
Totally.
assets.
Wise
You've been
man.
doing the same thing. That's why you got into these cash flow plays, right? You've got a lot
Yes.
of cash flow plays that you're looking at, the residential assisted living. You got your
Yes.
hotels, which are cash flow
Hotels. Yeah.
plays. These are income producing, income generating assets. The multifamilies
Yes.
are as well, but these are monster income generating assets.
Exactly.
The
Yeah.
path you took from the East Coast, I'm really looking at, you went from East to West. You went from India, then you came to D.C., Maryland, and then you came into Ohio, and then you came over to California. It's kind of similar. You took this single family market, you came in, you bought up to 18, and then you shifted into 14, then 109, like in almost instantaneously as you were coming across. And then you got into, you had 100 and
300s
yeah,
and 250s and 191s and 92s, 367. Oh my gosh. I mean, and that's how, if you track other multifamily operators, syndicators, or fund managers like me, that's how they have seen their growth. To really jump into multifamily when it was cheap, but not last 3 years.